Welcome to House Lux Estate, the hub of enlightening and engaging content that enriches your knowledge about various industries. We're here to guide you through a world where finance and real estate converge, where you can discover hidden pearls of wisdom and navigate the complex labyrinths of these sectors with ease. Here at House Lux Estate, we strive to provide you with a diverse range of topics, from understanding the intricacies of mortgage financing to exploring the exciting opportunities in commercial real estate investment. We also delve into the dynamic world of finance, unearthing the secrets of banking, investment strategies, and economic trends. Our aim is not just to inform, but to inspire and equip you with the knowledge you need to make informed decisions. So, buckle up as we embark on this journey of discovery together. Stay tuned as today we delve into the fascinating world of banking. Did you know that the concept of banking has historical roots dating back to 2000 BC? Yes, the timeline of the banking industry extends far beyond modern civilization, all the way back to the ancient city of Babylon. In those days, banking was a far cry from the digital transactions and credit cards we're familiar with today. It was here that the very foundation of banking was laid with grain loans. Traders and farmers of Babylon were the pioneers of this ancient banking system. They would deposit their surplus grain in temples, which acted as the earliest known banks. This grain was then loaned out to other traders and farmers, facilitating trade and agriculture. Over time, these grain loans evolved into the complex banking systems that we know today. So, the next time you use your bank's app or walk into a local branch, remember that you're participating in a tradition that's been around for over 4,000 years. That's right, the banking industry has been around for millennia. Paper money, a common sight today, was first introduced by the Chinese during the Tang Dynasty. Now, imagine a time when coins made from precious metals were the only form of currency. Heavy, messy, and not exactly wallet-friendly, right? This was the state of affairs until the 7th century, when the Chinese came up with a better solution: paper money. The invention was an ingenious solution to the cumbersome coin system. Instead of lugging around hefty bags of coins, people could now carry lightweight, easily transportable paper notes. This revolutionized trade and commerce, making transactions smoother and more efficient. Over the centuries, this concept spread across the globe, with each country adding its own unique touch to their currency design. From intricate motifs to portraits of national heroes, every banknote tells a story of its nation's history and culture. Next time you look at a paper bill, remember its ancient origins. Banks are synonymous with security, but they have not always been impervious to theft. Take, for instance, the largest bank heist in history, which took place not in a Hollywood movie, but in real life. This audacious theft occurred in Iraq in the year 2003. In a daring story that could have been lifted straight from a thriller novel, nearly $1 billion were stolen from the Central Bank of Iraq. This staggering sum was not stolen by a sophisticated gang of international thieves, but allegedly by none other than the then-president Saddam Hussein. In a note allegedly written by him, he authorized his son to withdraw the money. The audacity of the theft is matched only by its scale. Despite advancements in security, banks remain targets for ambitious thieves. This story is a testament to the fact that sometimes truth is indeed stranger than fiction. Banks play a critical role in the economy, far beyond holding deposits and issuing loans. You see, banks are not mere vaults where we store our money. Banks are like the heart in an economy, pumping money around to keep the system functioning. They are key players in implementing monetary policy, which is a set of actions taken by central banks to control the supply of money in the economy. Banks also create money. Yes, you heard me right. When banks give out loans, they essentially create new money. This is because when a bank issues a loan, it credits the borrower's account with a deposit, and voila! New money is created. Finally, banks stimulate economic growth. They do this by providing loans for businesses to expand and for consumers to purchase homes and cars, thereby driving demand in the economy. So banks are not just about storing money, they are pivotal in shaping economies. The digital age has significantly transformed the banking industry. It all started with the introduction of automated teller machines, or ATMs, in the late 20th century. These machines brought banking to our fingertips, making it possible to withdraw cash, deposit checks, and even pay bills at any hour of the day. As we moved into the 21st century, the explosion of the internet led to the birth of online banking. Suddenly, managing finances became as easy as clicking a mouse. Consumers could check their balance, transfer funds, and even apply for loans without ever stepping foot in a bank. Then came the era of smartphones. With the advent of mobile banking apps, the banking industry underwent another significant transformation. Now, banking is literally in the palm of our hands. We can make transactions, invest in stocks, and even manage our retirement funds from anywhere in the world. As technology advances, so does the banking industry. Interest, a term so common in banking, has a rich history. The concept of interest dates back to ancient civilizations. The Sumerians, living in what is now modern-day Iraq, were the first to introduce the concept of interest around 5,000 years ago. They recognized the potential for profit by lending grain and silver, expecting more in return. Fast forward to today, interest has become a cornerstone of modern banking. Banks lend money to borrowers and charge interest on these loans. This is the main way banks make their profit. On the other hand, when you deposit money in a bank, the bank pays you interest. This is the bank's way of thanking you for letting them use your money. Interest rates vary and are influenced by several factors, including the economy's health, inflation, and monetary policy. So, next time you hear about interest rates going up or down, remember that you're participating in a financial tradition that's been around for thousands of years. Interest is indeed a powerful tool in the world of finance. And while banks symbolize stability, they are not immune to failure. Yes, you heard that right. Banks, just like any other business, can fail too. Over the years, we've seen some notable failures that have had a profound impact on the world economy. Take the Great Depression, for instance. In the early 1930s, over 9,000 banks failed in the United States alone, leading to billions of dollars in lost savings. This was a major factor that contributed to the economic crisis of that era. Fast forward to the Great Recession in 2008. The world witnessed the collapse of Lehman Brothers, one of the biggest investment banks at the time. This event triggered a financial crisis that spread across the globe, causing economic hardship for millions. Such instances remind us that while banks are pillars of our financial system, they are vulnerable too. Bank failures, though rare, have significant economic consequences. So, next time you think about banks, remember they're not just about money and interest rates. They're about stability and trust as well. The banking industry is a major source of employment worldwide. This vibrant sector employs millions of individuals, making it an integral part of the global economy. From tellers to financial analysts, the banking industry offers a wide array of job opportunities. Every year, thousands of fresh graduates enter this field, bringing innovative ideas and energy. The sector also provides robust career growth, allowing individuals to climb the corporate ladder and achieve professional success. Moreover, the banking industry doesn't just provide jobs, it also contributes significantly to the global economy. The services banks offer, such as facilitating transactions, lending money, and providing financial advice, are vital for economic growth and stability. Additionally, the banking industry also indirectly impacts employment. By providing loans to businesses, banks enable them to expand, innovate, and create more jobs, thus stimulating the economy even further. The banking industry is indeed a major player in the global job market. Some of the largest banks in the world hold assets worth trillions of dollars. If you thought your local bank was big, just imagine the scale of these global banking titans, starting with the Industrial and Commercial Bank of China, or ICBC for short. This banking behemoth is often considered the largest bank in the world, boasting assets that reach into the trillions of dollars. Then there's JP Morgan Chase, a household name across the United States and beyond. This financial institution holds an impressive tally of assets, making it one of the largest banks globally. Not to be outdone, Mitsubishi UFJ Financial Group from Japan and HSBC Holdings from the United Kingdom are also on the list. Both of these banks carry considerable clout in the global banking industry with their vast assets. Finally, we have the Bank of China. This banking giant, with its roots dating back to the early 20th century, also commands a massive asset base. These banking giants indeed hold significant economic power. The future of banking holds exciting possibilities. As we inch closer to a fully digital world, traditional banking is making way for digital banking. No longer will customers need to stand in long queues or fill out extensive paperwork. With a few clicks, banking transactions can be completed from the comfort of our homes. Cryptocurrencies, too, are shaking up the industry. As decentralized digital assets, They promise a future where financial transactions are more transparent, secure, and quick. Banks are now exploring ways to incorporate this technology into their systems, marking a significant shift from traditional banking norms. Artificial intelligence, or AI, is another game changer. Banks are leveraging AI to improve customer service, streamline operations, and detect fraudulent activities. AI-powered chatbots, predictive analytics, and personalized banking are no longer a thing of the future, but a reality today. The banking industry is continually evolving, promising an exciting future. We hope you found these facts about the banking industry enlightening. Today, we've journeyed through time, from the ancient roots of banking to the first paper money, all the way to the largest bank heist in history. We've explored the integral role banks play in our economies and how technology continues to shape this industry. We've learned about the concept of interest, bank failures, and the banking industry's significant contribution to employment. We've discovered who holds the title for the largest bank in the world and pondered the future of banking. Banks are a cornerstone of our modern lives, impacting us in ways we often don't realize. They aren't just about depositing and withdrawing money, they're about fueling economies, fostering growth, and shaping the future. Don't forget to subscribe to House Lux Estate for more engaging content. Until next time, stay curious and keep learning.